Hi guys, welcome to Gold Price Daily Analysis. Today is Monday, 3rd of June 2019. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We do urge you to check out the description of this video for the link for the Telegram room. Please join the Telegram room for the sake of any updates. It would be delivered to you through the Telegram during the trading session. Also, we do urge you to watch our last two videos in order for you to get the best of this video. We are going to start our analysis right after a quick recap. On the last trading session of Friday, we have been waiting for important economic data to be released from the United States for the PCE deflator in line with forecasts, core PCE price index in line with forecasts, and core PCE price index year to year in line with forecasts for the Michigan inflation and sentiment expectations both below forecast. For the gold price action of the last trading session of Friday, actually gold as expected did a hot rally on the last trading session. It was on the demand since the early trading hours of the last trading session of Friday. It made it toward 1,307. However, gold in its way to the upside did not consolidate enough, and gold is overbought or was seen last overbought in the 1 hour and 4 hours chart. For the strategy recap, in our last episode, we said that gold is in a neutral ground with a bullish momentum, and we said that there is a clear sign that gold will attempt to trade above 1,298, which happened actually in the last trading session of Friday. Also, we said we do prefer not to buy gold at that time and to wait a close and break above 1,300. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Monday, we will be waiting for the following economic headers to be released from the United States: the manufacturing PMI for May, and the ISM manufacturing employment for May, and the ISM manufacturing PMI for May, all to be considered as market movers. That's all from the economic calendar. We'll move on now to the technical indicators. On the last trading session of Friday, we have had a trading range from 1,290 plus toward 1,306 plus. Numbers are rounded and the market is closed. For the daily closing price for the gold spot on the last trading session of Friday, it was above 1,305. The market is closed. For the daily simple moving averages for the 20 days it's 1,283, for the 50 days it's 1,288, for the 100 days it's 1,296, and for the 200 days it's 1,260. Gold now is on a bull trend above its daily simple moving averages, all of them. For the RSI readings, for the 1 hour it's 78 overbought, and for the RSI for the 4 hours is as well 78 overbought. We actually did not see much of consolidation on the last trading session. For the 1 day it's 66 bullish. Also from the RSI wise, we are in a bull trend. For the supports and resistance, 1,300 followed by 1,295.94, then 1,288, then 1,285. For the resistance, 1,307. This is tough. Then from 1,311 to 315, it's tough resistance. Then 1,323. That's all. We'll move on now to the strategy. For the trading strategy, the trend is bullish and the price action is positive. We are above all the daily simple moving averages and the US dollar is offered. Our bottom line advice is to buy. Before arriving at the detailed advice, let's have some considerations. At the first place, I would like to say that I am so happy that gold made it out of the tight trading range which we stuck in the month of May from 1,266 to 1,303. Sure, I would be happier if the break happened from the downside below 1,266, since I have since that was my theory during the month of May. However, though of the break, I am still holding a negative view on the gold market, and I believe it can become a bearish market at any point of time. But we will put this aside because numbers now suggesting that complete absolute truth. So as we said, technically gold is trading in a bull trend, having the fact that it closed above 1,300. And there was also limited sell-off or limited profit taking in the last trading session of Friday. Also, the negative sentiment still favoring the gold on the other or on the riskier assets. Also worth noting from the technical point of view that gold is overbought in the 1 hour and 4 hours charts, which suggests a slowdown to the upside. This is one part of the story. The other part, that the trade war or the trade conflict between US and China got escalated during the weekend, which suggests that gold might open a gap up and avoid the consolidation for a little bit of time. It's better for the bulls that gold do a test of the level 1,300, which is a support now, which was a very tough resistance in the or a few weeks ago. But the considerations that we have just said right now, the escalation tension and the sentiment of the market, maybe will not let this happen as we imagine. So the trading idea, if you wish to benefit of the current situation, buy at the market and with a stop loss as low as 1,290 with a target of 1,323. You choose your entry, depends on your risk tolerance. Also, if gold reached 1,324, try a sell short with a target of 1,300 and a stop loss of 1,327. Thank you guys for watching. That's all for today. Please like, share and subscribe, and I will see you tomorrow in another video.